How's it, Drew? How you doing?
Very good, and you, man? How was your weekend?
Ah, man, it was all right. Pretty typical weekend here in Cape Town. Went and got a lot of food and took it easy. How was everything in
Oh,
the UK?
nice. No, good, thanks. Yeah, I had a good team meeting on Saturday. Did some more properties. Very, very productive, eh? And as you can see, I'm at a
Nice.
train station now, so catching a train to Doncaster, then down to London. Back in South Africa in the morning. So yeah, I mean, it's been a great trip. It's been 2 years since I've been back. So it's good to meet up with everyone, the team, see what's happened in the market. I mean, Dave, the last 18 months, property prices have gone up by about 11% across the board, which is pretty impressive. Market is
Yeah.
hot. Tenants rentals going up. We hardly have any vacancies. It's crazy, crazy but good.
Yeah, man, that's good. No
Yeah.
complaints.
And I think that it was Thursday, right? We went live on Facebook with Alex
Mm,
talking about a flip he's doing, multi-lets. And there's definitely, lots of South Africans that still are investing in South Africa, which is great, like you and I, Dave. And where people have the opportunity, it's always good to diversify into other markets, be it England, be it America, be it Australia, wherever it's going to be. And that's what our talk's going to be a little bit later on, right, with Linden Booth. Maybe
yep,
talk around that,
100%.
Dave.
Yeah, so we'll talk about, we'll bring, we got Lyndon and Rian from Wealth Point. They're going to come on and talk to us about how everything looks and how, sort of, the topic of conversation was, what's the difference between investing the old school way, Andrew, the way you and I did it, and the new school way, which is
Yep.
obviously using a partner to come and bring those facilities in. So we'll be definitely having those conversations. So if you have some questions for Lyndon and Rian, who'll be on in a couple of minutes, then we'll go through that. Otherwise, Drew, let me run through our event schedule for a couple of days, talk about what's happening, and we
And then,
can go
Dave,
from
while
there.
you're doing that, while you're going through the events, let us know, ladies and gents, who right now is wanting to invest offshore, who wants to start investing and earning the pound currency or dollars. Is anybody investing overseas, or is everyone just investing in South Africa at the moment? Let us know, and remember to tag in your friends or colleagues, anyone that's interested in property, like this comment or this post. We'll be posting some links in the chat box for you as well. And then once Dave's gone through the events, we'll bring on Lyndon and the team.
Perfect. That sounds good. Okay, so it's pretty quiet because of all the because of all the long weekends. The calendar's starting to look a little bit weird, but it's fine. So we've got our coffee chat today. The brokerage is hosting a quick webinar tonight. So if you are in touch with the brokerage, you would have heard about that. This Saturday, Andrew, you're hosting a half-day workshop about building your property portfolio. Do you want to talk about what we're going to be covering there while I share a link?
Yeah, absolutely. So Saturday morning starts at 9 o'clock till about 2. And I go through a lot of the basics in property, like running the numbers. Is it a good or bad deal? What questions to ask? How do you assess the deal? A topic that everyone gets stuck with is property funding solutions. People that don't know how to unlock equity, don't know how to get sellers to finance the deal for them, don't know where to start or how to get started. So I'll be showing a lot of the beginners or people with, one or two properties. How do you actually take that next step? What questions should you be asking? How do you assess deals? How do we access or how do we negotiate with the private seller how they can finance the property for you? So it's a great day, Dave. 9 till 2. It's the second one we're doing for the year. And yeah, that's what we're covering on Saturday.
Then, so that's going to be it. That's mostly it for the week. Looking a little further forward, the one thing to talk about is our development workshop at the end of the month. Sorry, at the end of April. So from the 29th of April to the 1st of May, we'll be hosting a development workshop with Mark Berman. Andrew, you're also going to be there. I think I'm going to be there. What are we going to be covering with Mark over that weekend?
Jeez. I think what are we not going to be covering with Mark? I mean, we ran a 2-day workshop last year, Dave, if you remember, and we struggled to get through all the content. Hence why we're starting the actual workshop on a Friday. And we are covering everything from A to Z. That's why it's 3 full days. It's intense. Anybody that wants to learn how to develop a small 1-bedroom flat at the back of your house, or you want to develop and build 50 flats or 100 flats, it's everything, Dave, from how to assess the land. How do you know if you should buy that piece of land? What questions to ask? What do you check for on the title deeds, the zoning? How long does zoning take? What does it cost? And just literally, and I'm not joking, literally from A to Z, everything to do with it. So when you do walk out there, your knowledge and theory would have gone from this level to that level over 3 days.
Yeah, that's really fun. So guys, there is an early bird special on that at the moment. So that early bird special runs until the end of the week, pretty much, as long as it's March, that early bird special's there. So if you want to grab those tickets, go for it. It is a 3-day event, so unfortunately the tickets are a little more than we usually have, but it's a long, intense workshop with some really great experts. So it's going to be a really fun one to have. But hey,
Definitely.
cool. Do you want to kick this into high gear then, Drew?
Yeah,
Now that
I
everyone's
think let's
starting to
bring in
roll in.
like guest speakers. I'm assuming we've got all our regulars with us today, which is great. We've got Lyndon and Rion with us today. How's it, gents?
Oh, great, thanks. Nice to see you in the UK, Andrew.
Yeah, absolutely. I'm actually flying back this evening. It's been very interesting, Lyndon. I mean, I've been viewing quite a few properties. The property market's just boomed here. Property prices have gone up. People are getting more than asking prices. Most of our rentals have gone up. Our vacancies are very low. So it's a very interesting market, I must say. It's been very interesting coming back, comparing South Africa to the UK. And I think this is a very interesting conversation because, yes, there are some investors who do want to come over and they do want to buy £100,000 property. They want to set a company up. They want to set up, or they want to put the cash in. They want to be the owner. But for the majority of South Africans, they don't have £100,000 lying around. And that's why you guys are out there. How do you get the average South African who's maybe got £5,000 or $5,000? How can you help them diversify into other markets? So I think, it'll be useful if you guys can introduce yourself, and then we'll get into it, eh?
Yeah, sure. So, hi everyone. My name is Linden. I work for WellPoint, which is a financial services company. And one of the things we do is work with partners like Sapin to run digital real estate investment platforms where ordinary investors get access to deals that they would never have been able to get access to before, where they're investing alongside institutions and ultra high net worth. So people who are putting millions of dollars into deals, you get to put in money at the same level into the same quality deal at better returns than anywhere else. So, yep, we're a partner with Tapin, a very proud partner to be able to offer the service and help people invest offshore. Rian.
Yeah, my name is Rian van der Vyver. Hello, good afternoon. I'm Chief Investment Officer at WealthPoint. So my responsibility is to ensure that these institutional investment grade deals that Lyndon is talking about, that's on the platform. In other words, my team's responsibility is to find sponsors, to do a due diligence on them, and then to put pre-vetted deals on platform. Furthermore, one of the big things that we offer is compliance and investment structuring. So with Linden, my team is responsible to ensure that we run not only in-country compliance, but compliant money movements, that our investment structures are compliant, and so on. So that's a short introduction about me.
Awesome. So, Dave, I don't know if there's any comments yet or any questions coming in yet. I've got a few questions for myself.
Yeah,
and
no, I think
while David look at that, you guys mentioned something earlier that the market in the UK is going crazy, and it's not only the UK. I think we've seen large parts of Europe. We definitely see it in the US that the house market, in particular, has really gone nuts. So while I'm not a financial advisor, what we are noticing on our side is a lot of people who got into housing, who got into apartments offshore over the last 5 or 10 years are exiting. Because when prices are this good, you don't want to buy when the price is at the top. You want to sell when the price is at the top, and you want to buy when the market's at the bottom. And I think we're seeing in the housing market, it's probably one of the biggest, I wouldn't say a bubble, but it's certainly a distortion in the housing market that's been created offshore because you've got, out of COVID, you've got governments putting so much money into the system, and interest rates are extremely low at the moment. So from the average person, this is, you think, geez, I've got money and my interest so low, let me go buy a house. And everyone does that, and suddenly prices are ridiculous. So we're getting a lot of our high net worth, so people like maybe you, Andrew, who have a whole bunch of houses offshore. We're getting a lot of them selling at the moment to get real benefits.
I've sold some.
Crazy bubble. And then they're looking around and saying, well, where are the deals now? Where are the opportunities in offshore investment? And it's no longer in the housing market. It's in the institutional market. And it's because digital platforms like the one you guys have made it so easy and so much safer, that it's the logical place for people to now be building offshore real estate rather than the housing market. yeah, we watch the space interestingly, and it's I think there's massive opportunity right now outside of the housing market, because I think, personal opinion, and this is my opinion, I'm not a financial advisor, but if you're buying a house right now, I think you're nuts, no matter where you are. As an investment house in the UK, in
Absolutely.
Europe, or the US, I think it's completely the wrong time, as well as an old-fashioned model. But apart from that, it's just the wrong timing.
And tell us, Lynn, what markets are you playing at the moment? Which countries? Where are you operating?
I'll let Rian handle that.
Yeah. So in terms of real estate, Andrew, we're currently looking at industrial. We're looking at logistics. Although we've got a few multifamily deals on the platform, the idea is not to extend that too much. We're looking at old age care, aged living. We're also looking at commercial in the sense of office, but we are very cognizant of the potential impact of COVID. And then something that's very interesting is the so-called new economy. So what we like to identify is, for example, a sponsor that's got a typical office building where they converted it, where companies store their servers, data warehousing, for example. So in other words, it is a commercial building that's been changed into this new economy. So in other words, real estate, which is not necessarily linked to the interest rate, which I think is so important. Or, for example, cell phone companies, where they typically take up the roof of a commercial building to put up their equipment and stuff. So in other words, once again, you've got a good quality anchor tenant, and it's not linked to the interest rate cycle. So those are the opportunities that we're trying to find. And I think it speaks to what Linden has been saying, that it's not, that it's not only a multifamily or a so-called housing real estate platform. So it provides true diversification into the various subsectors within property. We currently have deals on platform in terms of the US. We're looking to go, we had a deal in Portugal. We're looking to move more aggressive into Europe. Just to give you an idea, we're reaching out to about 15 sponsors in Europe. The UK bid is coming soon. Once we have our FCA approval, then that allows us to actually market UK deals to UK citizens. Nothing prevents us currently to actually offer UK deals or UK opportunities. And then we've got an Australian deal as well. We find quite nice alternatives to multifamily co-living. For example, we find very nice opportunities in Australasia.
And then tell us, what's the entry point there? I mean, how much does one need to get involved?
Linden?
Yeah, you won't believe us, but on the Sapin platform, it's $1,000. And the reason is because and I see there's a question here from Clarence, I'll deal with it at the same time, is what is a digital marketplace? Basically, a digital marketplace is, if you think about if you want to go and buy shares in stocks, you will go into a digital platform. Easy Equities is probably the one best known in South Africa because it's easy for people. And everything's digital. It's through the internet. It's on web, online. And you have things, for example, like a wallet within the system. So once you've deposited your money, it stays there, it's held securely, and then you can make your investment decisions from there. So the digital marketplace is just an online place where you can go to make your investments and get everything you need, etc. I think in terms of the minimum, $1,000 is where the Sapin minimum is. It's probably one of the lowest in the world. Thanks to the South African regulator, who really is excited about allowing ordinary South Africans to have access to offshore real estate at quality deals that they've never been able to do before. We deal a lot at the moment with other countries, India, United Arab Emirates, European investors who use our platform, and all their limits are much higher. It's $10,000 or $100,000. But because we've got a great regulator in South Africa, and with Rian as a fully licensed Category 2 financial service provider on the Sapin platform, we can drop that down to $1,000. And sometimes when we work with you guys to do trainings, it can even come down to $100. So it's an amazing opportunity. Instead of having to go and take £100,000 and put it all into one deal in the US and have one little high risk apartment, you can take that money and put into 20 proper institutional quality deals around the world, better returns, less risk, and you can have this offshore real estate portfolio. It's just phenomenal.
It's a no-brainer. And what's the exchange rate now today for in
Ah,
dollars?
geez, 14.5 to the dollar. So not only it's just everything right now for the next few months. This is about as good a time as you're going to get to be able to get some money offshore and buy really good deals in the commercial and institutional space.
I think, sorry, Andrew, I think, Linden, what you say about the next 2 months, with the geopolitical risk, with the risk of increasing interest rates, the risk of increasing inflation, it just creates the sweet spot in this institutional market. So one, you're taking money out at a fairly lower exchange rate, but two, as interest rates go up, your exit cap rates come down. So there's a higher probability for a capital gain at the end. But more importantly, as inflation goes up, through income generating deals, it gives the landlords more power at renewal to get higher rentals, which then means that the income generated by that deal increases as well for investors. So in this geopolitical risk environment where you've got a tangible asset that's generating income producing yields, we believe that it provides a very nice hedge against this uncertainty, the volatility, and let's call it the headwinds that we're expecting in economies due to an increase in interest rates, increase in inflation, and so on.
Absolutely, yeah. And Linden, were you going to say something there?
Yeah, I was just saying, it's never actually, when we look back at the last 3 or 4 years, this next 3 or 4 months is probably some of the best opportunities we've seen for South Africans to get into offshore real estate through this kind of mechanism. It's just, everything's lining up in such a great investment way. And I often listen to Rian speaking to our high net worth investors, and most of it goes over my head, and I think, geez, I don't understand that. And then I have a look at the basic numbers, and I compare it to, for example, buying a house in the UK, and it's just the returns are better, the risk is much less. It's really passive. I don't have to do anything. Whereas if you've got a house, Andrew, you've got to have your finger on the ball to manage that house and pay the right people. And it's just it's exciting time for us, and I think it's really exciting time for Sapin and for your guys investors, because with your own platform now, there's never been a better time really than the next few months.
So we're talking about an entry of about 15,000 Rand for someone to get involved. Talk to us about the term. Are these 5-year deals, 10-year deals? Do I get capital growth and rental return? How does all that work?
Yeah, absolutely. So it's 100%. You own the building alongside other people. Now, what's really exciting about our model is that you own the building alongside the institutional investors. And so let's just talk when we talk about institutional investors. So let's say you're Sanlam or you're some big financial house and you've got a fund, and they are looking for what are the best places for them to put their money. They go and look for big institutional quality deals where they're getting really good returns. And through this model, you are able to invest alongside them. So you are a shareholder right next to them. You own the same building as they do, your piece of it. You're a shareholder in that building. So you get the capital upside. They, as the person who's bringing the deal, has to organize the mortgage and the bond, and they stand surety. So there's no risk for me on the mortgage of these buildings. They're 70% mortgage, just like if you're buying a house, but I haven't had to get that mortgage and I don't stand the risk on it. It's handled by these big institutional players. So you're getting in on the ground level, the same level as these good guys. You're not having to take care of the work of doing this. And at the same time, you're getting all the upside. You're an equity shareholder. You're a shareholder. So as the value goes up, you get capital gain, but you're also getting the cash returns from the rentals that are happening from all your quality rental partners. And they use the best rental negotiators around. These are big companies doing the proper. There's nothing small or kind of chance here. Rian and his team make sure we only deal with the best multi-billion-dollar companies who are running these deals. You can't get access to that any other place or any other way.
Exactly. So talk about the process then. Let's say I'm sat here and I've got 15,000 Rand. Talk to me. Do I log into a website? Do I get KYC'd? Just talk us through that process. How do you actually do it?
So, that's the joy of the Sapin platform, is it's incredibly easy. You log into the Sapin platform. I see that there's a link there. If you go to global.sapropertynetwork.com, And that platform is highly regulated across the world. So in South Africa, it's regulated. In Europe, it's regulated by different people who play different roles. So your investment journey is about as safe as you're ever going to get. It's like investing in the stock exchange in terms of all the role players who are doing different services on that platform. So you log in, just your name, email, password. You create an account, very easy, upload your passport or your ID document or your driver's license and your proof of residence. Put in the bank details of when you start getting your money back, you want money to come back to you in dollars or in rands. And then you deposit money. And from there, you've got all the deals are on the Saturn platform. And you can go and have a look at them. There's information there. You can join us when we run our webinars with Sappin. You guys invite people to come and listen to information about deals. And it's incredibly easy. And then, of course, there's our team and your team to help people if they want more information. So we've really taken what technology has done, added multiple layers of regulation and financial services licenses on top of that, and then bringing these world-class deals. And as a user, it's never been easier. We just log in and everything.
Linden, I think one thing that you just mentioned about, investor safety. All cash custody, i.e. access to investor money, and the flow of money is done externally. So in other words, we make use of a European payment service provider called Lemonway, which is regulated by the French regulator, and they are the custodian of investors' cash, which I think is so important, So in other words, what we do is we find deals. Sappin, for example, bring investors, and we've got this compliant money pathway to ensure that investor money get to a deal safely and transparently by an external cash custodian, which I think is so important for investors and investor peace of mind.
Yeah, we have
absolutely.
I think we have more financial licenses involved in our financial. If you're an investor, you touch so many financial licenses in different parts of the world without even knowing about it. But we take security of investors and our own money because I invest on the platform. We take this.
Exactly.
Minimizing it is the most important thing for us.
Okay, awesome. So I think what we'll do now, Linden and Rian, let's bring Dave back on. Ladies and gents, if you have any questions for Rian and Linden, now's the time, unless to ask some questions there, Dave, but we could run through the events for the weekend next week, and then come back and ask Linden and Rian any more questions. What do you think?
Cool, that sounds good. So like I said, everyone, it's a pretty quiet week. The next major thing for you to all be aware of is the workshop on the 2nd. That's this weekend. There's a free workshop that Andrew will be hosting from about 9 o'clock until about 2 o'clock. On there, we'll be discussing how do you get your portfolio growing as well. So if you are already a property investor and you want to talk about diversification, then we can discuss that over the weekend as well. Otherwise, the next major event after that to talk about is the development workshop on the 29th of April, and I'll share a link in a second. That'll be running for 3 days. It's a nice, long, intense workshop, really getting you up to speed with what is happening in the development space, and you've got the good opportunity to get that on discount for the rest of the month. The early bird special does end at the end of this week. Otherwise, I'm not seeing any other questions at the moment. Linden, Rian, do we maybe want to talk about one of the deals that are on platform and then look at that first?
Yeah, Dave, we can happily do that. Maybe I can just quickly last comment here since we're talking the big stuff in the UK housing market and where Andrew's sitting right now. I had a really interesting chat this morning to a financial advisor because they've been looking at our platform. Now, this is a guy that comes from a very big firm, one of the biggest firms in South Africa that sells offshore property. So they sell apartments in the UK specifically, but also in Europe these days, I see. And it was a really interesting conversation because he's a financial advisor advising people how to buy money. And he wanted to check our numbers because he had punched the numbers. He had gone onto the platform, had a look at the deals, and then was comparing it to the UK deals he was selling. And he was looking at the numbers and, across the board, the numbers of the returns you get as an investor through the platform were so much better than what they were offering their clients. But what was really interesting, and at the end of it, he said, you know what, guys, I'm a bit nervous because your returns are better, but I'm not going to sell what you guys are selling. And I was like, why wouldn't you? Surely your interests are the investors' interests. And he said, no, I make 15% of the investor's money every time I sell a house. I just couldn't believe that. I was like, how do you make 15%? And he says to me, well, let's say an investor is putting in £100,000 and there's a mortgage of 2/3. So the property itself is worth £300,000 and he's making 5% of the sale price. So he makes 5% of the full, which works out to 15% of what the investor's actual money is, if you work it out. And he was like, I make 15% on every time I sell a house to a South African in the UK. And he says, and we're cheap. Most people get paid between, a lot of the financial advisors or these companies are getting paid between 5 and 10%. So if you're on the higher end of the market, 10% of the house price, they're making 30% of what you as the investor have put in. Whereas on your guys' platform, the fee is 3%. And so you're paying 1,000 times more percentage fee to that guy, and he's obviously built that into the model. They've built that 5% or 10% into their model. So from a fee perspective, I hope we're moving towards a world through digital platforms like this where people are no longer getting ripped off by financial advisors and sales agents who are making between 15 to 30% fees on the sale of a house in the UK. It just doesn't feel right. It feels like exploitation.
I mean, Linden, I think it's a good time, just to talk about alignment. You've touched on it. One of the things, that we look at when we pre-vet a deal is that the sponsor their interests need to be aligned with the investor's interest. Linden has alluded to the fact that the sponsor signs personal surety or guarantee for the senior debt, but we also require 10 to 15% co-investment by the sponsor. So in other words, it's not a case that it's the bank and external investors. It's a case of it's the bank, the sponsor, and external investors. So the key point here is by investing in deals, we're not creating exit strategies at inflated values for sponsors. We are actually aligning the interest of the investor with that of the sponsor. Furthermore, most of these sponsors have what we call a return hurdle or a preferred rate. So let's say 8%. If that deal doesn't give the investor 8% back first, plus capital, the sponsor does not earn in any upside. So in other words, from that perspective, there's quite a lot of alignment between, let's call it the sponsor, the deal, and our investors and the SAPN investors. But then also, Linden, I think what is quite important, Andrew, is that, the typical model where there's aggregation is that there's an AUM fee. So a provider would take a percentage of assets under management, whether the deal is providing a proper return or not. On the SAPN platform, the pricing is of such a way that it's transactional pricing. So in other words, when the investor gets a distribution, anybody else gets a bit of the fee as well. So it's not this unalignment, in terms of investors and fees. The investors and all service providers involved, they are aligned as well. Because if you as an investor earn something, the service provider earn a fee. And it's not the standard AUM model that we've been discussing.
Yeah, I think it's an important point to mention there. Is that this isn't a sort of like a liquidities market. We're not going on there. People are buying shares and a thing. People are investing on the ground floor in these deals, and that's part of the reason why there's the timelines that we always talk about. A deal being launched and the deal being closed, is those timelines really become important then, because you're not just buying shares that exist in a project that already runs. It's you're buying into that as you would a joint venture agreement. You're just a very small partner in this JV. That's an important thing to remember. Yeah.
And the big thing, Dave, there is that there's no headache. That's the thing I like about it. It's unlike Linden, they're coming over here to these properties, these damp works, and there's leaks in the roof and the ceiling. It's like it just never ends. But yeah, I love the idea of investing to America, investing to England, investing to Portugal. With no hassle.
But what's nice as well, guys, is through this model, you're piggybacking on people who know how to make a lot of money. So the people who are normally investing into these deals, as I've said, they're institutional investors or they are billionaires, rand billionaires, and they have got legal teams, etc., who have structured deals for the last 30, 40 years to make sure that they are making money. So all the things Rian was talking about, they know that. And you're in now, for the first time, because of technology and regulatory changes, you can sign the same contract, because that's what you do when you invest with us, as these guys are signing. But they have spent 30 or 40 years designing those contracts in such a way that as a passive investor, they are looking after their interests first. They're making sure that they are getting a good return, not just the developer making money. And you're now getting the opportunity to invest at the same level on the back of all their knowledge and legal expertise, etc. And so it's a game changer. I, as Linden, some guy sitting in a suburb of Knysna or Cape Town or Joburg or Durban, I don't have to have all this knowledge, because they have got 30 years of the best legal minds figuring out how to structure investments to benefit themselves as investors. And I'm now slotting right in alongside them. So it's just a completely different game. It's the developers can't screw them around, can't charge 15 to 30% investment fees, can't do all these things that just really leave you vulnerable. It's as solid as you're going to get.
Dave, and I think one thing that's also so important, it is one thing to do the investment, but as we've been saying, the effort to manage it, the big benefit of the Sappin platform is that by logging on the platform, investors can get typically quarterly feedback on a full, transparent way in terms of their investment. What was the return? Was it in line with expectations? If there were any changes to the property made? So it's just, that transparency, the ease of tracking your investment, and the quality of reporting, I think makes it so much easier for investors. And I also just want to add one thing, if I may. Linden, you say that we're one of many investors. I think the key point here is a big advantage of the Sappin platform is that we are aggregating lots of retail investors, individuals into a deal. So they still see us as an institutional player, which then allows us to get access to this quality reporting, feedback, and things like that, which I think is so important.
100%. Dave, I'm happy to just, if you wanted to, I'm happy to just show you the Sappin platform live at the moment.
I think if we can share, you might have a deal in the pipeline that I don't have access to yet. The share screen button's just below. But I think while Linden sorts it out, I want to comment on the fee conversation. We sort of spoke about it briefly, but it's good to come back to it. It's really important to understand the differences that come into play when you talk about fee structures. Sure. We talk about how it's investing compounds and how if you invest today, it compounds over time. It's the exact same with fees, unfortunately. And the lower you can get your fees, the lower you can maintain your fees, even if it's a difference between 4 and 3%, it compounds and has that growth. So it does have that roll-on effect.
Dave, 100%. And even more to that, you've got to make sure your fees are success fees. So in other words, I think Rian's mentioned it, and a lot of the players in the space, they charge you a fee every year, whether your building's making money or not. There's this ongoing fees, whether it's lawyer fees or accounting fees, et cetera, just adds up. Whereas through the Sappin platform, the fees only get applied over the life of a deal when it actually makes a profit. If the building's not doing well, the sponsor, firstly, Rian's already covered it, doesn't do well. And then the Sappin and the platform is not charging any fees if there's no profit. So, you've really just got to be smart and make sure you're loading the whole investment structure to benefit you, not to benefit the guys who are running the deals or maybe just have different interests up front.
Yeah, 100%.
Dave, can you guys see it at the moment? Can you see it?
Yeah.
In the chat?
Yeah, I've got it up.
This is the Sappin platform. So once again, everyone if you want to go have a look, global.sapropertynetwork.com, log in. At the moment, there's one deal on the platform, and there will be 2 or 3 more coming in the next 3 or 4 weeks, while Rian and his team are really looking for the good opportunities, because this is such an amazing time to be growing your international portfolio. This is a medical center. I must admit, my personal portfolio, I've got about 10 medical centers in my personal portfolio, and that's a great thing. I can say that. I mean, doesn't that sound cool? I've got 10 US medical centers in my portfolio, and that's because I can invest, $1,000 each time. But medical centers, just for me, are some of the best deals, because no matter what happens in the general ecosystem, financial ecosystem, people always need doctors. They always are sick. And also medical tenants are very solid. They normally stay there for 30, 40 years in the same building. Number one, if they've got big equipment, it takes a lot to move the equipment, medical equipment from one place to the next. But also doctors like being in the same place. It's not something where they move very often. So from a tenant basis, you seldom get a better tenant than a medical tenant, in particular, as I've said, whether they're doctors or got equipment. So I love medical centers. They've given me huge, good returns over the years, very stable, even in very tumultuous times, great investment opportunities.
And Linden, I think one thing as well, talking about this specific deal, the Hamilton Young Medical Center, you talk about doctors. This specific medical center is close to two hospitals. The Nova Hospital, which is one of the biggest in the US, and also a veterans clinic. So for a medical building, you want to be close to these hospitals because it's walk-ins and it's referrals. And one of our tenants in this building, they've got basically an association with the Nova Hospital. So from a positioning perspective, in terms of the stickiness, as we talk about it, in terms of the tenants, this building is ideally situated close to these hospitals and sources of referrals.
100%, Rian. So once again, all the things that point to the medical buildings and this one in particular being such a great opportunity. And, if you have a look at this deal, so that's the building. I'm very excited to be putting my own money into this building as well. It's definitely on my list at the moment. I have already, through the platform, gone and put in my my deal. I'm now just waiting for it to close. You can see it's a 5 years, so they will sell the building again in 5 years. More or less. It might be a little earlier, it might be a little later, depending on the market cycle. But the prediction is that the market cycle will top because you want to sell at the good point in the cycle in 5 years' time. That's why it's got a 5-year cycle. You'll see here that there's cash. So actually, in dollars, you're going to get 7.5% to 8% dollar return every year in cash. And that's another reason I love these deals is that I'm not waiting. For example, if I had to buy an apartment or a house, my annual cash returns are actually very small. In the UK at the moment, lots of apartments are returning between maybe 2, 3, 4% in terms of cash back. And then it might even be your first 3 or 4 years you're having to pay off some of your costs of buying the transaction, setting up your company, etc. Whereas from day one, you're getting these great returns. And then they've also done a very low projection on the capital gain. A lot of the apartments, once again, when we talked to that financial advisor this morning, they've taken this 10% growth in the UK housing market, which is the best it's been since 2007. And they're using that as the projection for the next 5 years, which is completely wrong. The projections are that by the end of 2022, the UK's housing price market will drop down to 3% a year because the price at the moment are so inflated. Whereas these buildings, as commercial institutional buildings, that are the price you get for it is completely associated to your rental, to your actual income. There's a much more accurate and conservative approach. So a whole bunch of stuff there. But bottom line is, over the 5 years, you invest 1,000, you're going to get 62% return on your investment over that time. And these are the conservative estimates. Rian and his team are very careful about putting what we think would be almost a worst case scenario into the numbers so that everything that happens from that point onwards is overperforming the returns. But even then, you're taking your risk out because you're getting your money, your actual cash is coming in over the time from day one. You're not having to wait 5 years to see, oh my goodness, is the capital gain going to be as big as we thought it was? But you're actually getting really good rentals from day one.
And if I may, I think there's one or two things that support that return. I think the first thing is, that the current occupancy of that building sits at 93.11%. So there's a 6% vacancy currently. But one of the anchor tenants, Vanderbilt Hospital, who rents 42% of the area, has already said they want to take that up. So you've got an anchor tenant. All financials have been done on a 5% vacancy. And if you look at the state of Tennessee, where this building is situated, over the last 5 years, the average vacancy was sitting at 5.3%. So in other words, we are fairly conservative in terms of the vacancy projections. So it's not that the numbers or the return numbers are done on 100% occupancy. Furthermore, this building was acquired at 26% below market cost. So in other words, there's this buffer in terms of capital movements, and the current rentals sits at 12.45% below market rentals. So in other words, there's potential for a capital increase, but more importantly, when leases are renewed, you renew it at current market environment. So in other words, there's this potential pickup for rentals, which provide the solid underpin for the probability of these returns coming through.
Yeah.
Dave, if I can just add quickly, because I see it's come up there about tax.
Yeah.
One of the great things about the platform is it's already taken into account, for example, capital gain tax that might be paid in the US or the UK. And that's the other thing that the financial advisor we were speaking to this morning got stuck on, because they tell investors, hey, you'll get a 70% return on your investment, but that's not taking into account the capital tax you'd then have to pay in the UK, et cetera, whereas the platform's immediately taken all of that into account in terms of UK tax or USA tax, and this is money you will get in your wallet. You will then have to pay tax in South Africa on that amount. But that's the same whether you brought your money back from an apartment or not, but it's already including a huge amount of that tax. So yeah, it's for us, we're just so excited as a company, the growth we're going to get and are already experiencing this year, just because deals are so much better. And, with SAP and platform, it's just made it so much easier for people to have their offshore portfolio.
Linden, on that tax issue, Dave, if I may, I think what is quite important on the platform, if you're an investor in a deal, every time there's a distribution, or let's call it an income payment, the nature of that distribution is clearly identified from tax perspective. In some jurisdictions, we're able to do a bit more, let's call it tax efficient structures, and from a tax an annual tax submission perspective, you can simply go into the platform, say my tax year is from this to this period, draw a report, and it gives you exactly your taxable income, the nature of the taxable income, and so on, which I think makes it so much easier for an investor in terms of taxation and offshore investments.
Yeah, 100%. Cool, gents. I think I'm about to get ready to sort of wrap this up. We're starting to hit limits on time, and we've unfortunately lost Andrew. But I did want to sort of reinforce a lot of what we're saying. I think for me, I met the WealthPoint team a little bit too late in my investing career, and I've said it a few times. I've said it to coaching students, and I'll maintain it. As an experienced investor in the United Kingdom, sometimes I can get a 2-3 points, 2-3% above what's on platform, but that's not what we're talking about here. Sure, there's a few extra points, but there's a lot of complexity that goes into that. There's running businesses, there's managing staff, there's owning a company in an offshore where you can't have your trust own it. There is dual taxation treaties, and sometimes you're being taxed in 3 countries because you've got a trust in the Mauritius or whatever you needed to do to get around the ownership loopholes. There's so much time and effort that I've put into building those businesses on the back end, and just to run it and get a decent return, it's proven to be one of the hardest things about it. To find a deal that works and makes money is part of it, but to do that ongoing day to day, because even now that I'm starting to slow down my UK portfolio, I've still got every month, I've still got taxes to do, I've still got staff to pay, I've still got things to manage. And that's what we're talking about here. It's a matter of reducing the barrier to entry and make it really viable and really achievable for people to invest in properties. And it's not just an ETF or a REIT that's got property in it. It's actually investing in properties. And that's sort of why we wanted to work with WealthPoint, and that's why we wanted to bring SAP and Global Invest to market, because it does reduce that barrier to entry and does give you guys the opportunity. And for 14,500 Rand plus a few extra admin fees, like, it really is about as cheap as you can invest in property offshore. It's really impressive. Cool. Gents, any last words or messages? And then I think we can sign it off and call it here.
Yeah, no, nothing other than the SAP platform's there. It's there, and both SAP's team and our team are here to help if you've got questions, and happy to really help make global investing and having offshore portfolios as easy as it gets to superb quality deals.
Yeah, and from my side, Dave, we take our responsibility towards investors very seriously, in the sense that finding the quality deals, ensuring that it's proper due diligence done on it, that it's pre-vetted when it's on the platform. And the investor then doesn't need to worry about the quality, but rather to make an informed decision on the type of deals on platform where they want to invest, instead of being concerned about needing to do their own research and stuff like that.
Yeah, 100%. Perfect. Thank you very much, Rian. Thank you, Linden. Just as an invitation to anyone, you can obviously go and set up your profile on global.sapropertynetwork.com. I put the link in the chat box a few times. But if you want to stay a little more up to date, I do manage the platform from SAP Inside. So I generally get first sight of all the deals. I also know what webinars are happening from the Wealth Point guys. So if you have any questions about that, you can email me directly, or you can just email support and it'll come to me at the end of it. Otherwise, Linden, Rian, thank you very much for your time. Appreciate it. Always good to catch up.
And thank you for the opportunity.
Cool. We'll call it there. Thank you, everyone. We're back again Monday, 1 o'clock every week, talking to you guys. Unless it's a public holiday, then Andrew and I might take the day off. Otherwise, thank you very much, gents. We'll chat soon.